to make this system more efficient, to get rid of unnecessary bureaucracy, to get rid of maybe lawyers. Sorry, I'm a lawyer myself.
It's very important to look at your product and say, does the current regime apply? Also, what's coming next?
Even some of the biggest blockchain networks have the resources to rival small nations.
Hello and welcome to the Common Factor series, where we connect leaders and experts from across their respective industries to explore a theme or topic. Today we're looking at blockchain and digital coin, and I'm lucky to be joined here with my guests Alyse, who is the co-founder of Transhuman Coin, Oleksii, who is a digital strategy advisor and blockchain expert, and Andrea Beatty, who's a partner and Fintech lawyer at Alderman. Thanks for joining us today, guys. I'm really happy to have you here. I'd love to know, how did you find yourself where you're at today? We'll start with you, Alyse. If you can give us a bit of a story about what you've been up to in this space.
Thanks, Darren. So I am the former director of Metaverse at KPMG, and today I do two things. So first, I run a venture studio called Transhumanism Australia. We work on a lot of blockchain and AI projects. We've worked with the University of Technology Sydney on their brain-computer interface projects as well. So we were actually at South by Southwest, where we got to showcase the ability to translate your dreams using a brain-computer interface just by wearing it on your head, and then it could record your neural activity while you're dreaming or sleeping, and then it can tell you exactly what you dreamt about the night before. And the other thing I do is I run Transhuman Coin. So we are the official token of the transhuman movement. So it's a movement that uses science and technology to overcome limitations of human biology. And we were recently on a reality TV show called Killer Whales. So I just came back from LA to film that show. It's a bit of an eye-opener that I realised that reality TV isn't really reality at all. There's a lot of rehearsal, a lot of pitch practice, and they get you to do several takes. So it was a quite interesting experience.
Yeah, awesome. Thank you. Oleksii, how about yourself?
Well, I hold a PhD in law, science and technology, and my journey in crypto began 10 years ago, roughly. So I specialize in blockchain technology, specifically tokenization of real estate, decentralized finance, decentralized autonomous organizations, that kind of digital stuff. So basically I have clients I advise on digital transformation and introduction of innovations in traditional spheres of business.
Thank you. And Andrea?
Well, my journey is quite interesting. I spent the vast majority of my career so far at Mallesons, as it then was, it's now King & Wood Mallesons, and I was basically a banking lawyer and then drifted into financial services regulation. And first of all, I got involved with non-cash payments. In fact, one of the most exciting projects I ever worked on was the establishment of BPay as a payment system back in the late 90s. That was a very unusual and quite an advance in technology to even have so many different financial institutions join forces to create what we now accept as being a very normal payment system. And then also establishing BPay View, which was electronic billing payments. And then in 2002, I co-wrote a book called The Law of Digital Payments with a fabulous gentleman called Dr. Alan Tyree, who was he was a consultant with the firm and also was very much at the forefront of everything to do with the new age of digital payments, basically. So that's how it all began, and has just extended onwards ever since.
Thank you all. And yeah, it's definitely a fascinating space, both digital payments and crypto. I mean, we've come a long way from buying a pizza with Bitcoin. But digital payments, I mean, Australians have generally shown quite a lot of enthusiasm and are pretty early adopters of a lot of digital payments. But what do you see as some of the biggest challenges facing adoption of digital currencies and stablecoins? Alyse, I might ask you first. What's some of the barriers there?
We need high inflation and a really bad payments rail or infrastructure. We can see that it's actually in countries which are experiencing high inflation, and some of you might agree, that have high adoptions of crypto or Bitcoin, and also where the payments system, such as the Oz Payments Platform or what is now called OSCO, or I think Andrea would be more familiar with what it's called today, is really efficient in that we can get interbank transactions settled, or we can see the money in our bank account pretty much instantaneously when we transfer funds from to a friend or other. So in other countries, it's not the same. You'll be waiting T+2, 3 days to receive the funds. So we can see that the countries that have adopted Bitcoin as legal tender, El Salvador, the Central African Republic, they have some of these problems, and that's why they've turned to Bitcoin and other cryptocurrencies as a potential solution. So if you look at some of the countries in Africa, such as Nigeria and Sudan, they are having 30 to 35% inflation and 150% inflation respectively. So that is why people are increasingly looking to other means as a store of wealth, and also looking at how they can transact in these currencies. And so for people such as Australians, we have really good infrastructure already, so it means that we're not looking for other alternatives, and the payment system is generally geared towards serving, or it is built by incumbents. So you've got card payments, Visa, MasterCard, also NFC chips, Apple Pay. So without the infrastructure that is available, such as what I mentioned in particular jurisdictions, then you are looking for better alternative methods. I just came back from Bangkok and Shenzhen, and I could see that what is prevalent is QR code payments. So Visa, MasterCard is accepted, but not accepted in a lot of places, not even on their transport system. But what is accepted is QR code payments. And it's superior because it bypasses any need for additional infrastructure being built. You don't need to spend billions, millions of dollars on, say, building the equivalent of the Oz Payments Platform. And all you need to do is enable a QR code to be displayed at the merchants, and also the ability to use smartphones to scan. So as long as you have really good, say, internet penetration, and maybe in some cases you can bypass the need to be connected to the internet to enable digital payments. So these QR code payment systems are prevalent in many developing countries, and just in Asia in general. So WePay, Alipay, we can see is firmly adopted in the Chinese ecosystem and accepted by mum and dad corner stores, which are in the outskirts of China, really remote places, to the big cities like Shanghai, Beijing, or Shenzhen. So I think for Western and developed countries, I think we wouldn't be looking, or especially in Australia, we wouldn't be looking at trying to replace our existing payment system. And I think the argument to use any digital currencies and stable coins is not as strong. So we would be looking at, in my mind, the ability to use stable coins or digital currencies as a payment for other type of means, such as AI to AI interactions. So everyone's talking about Gen AI right now, and the next iteration of how we're going to use AI is in AI agents. So any smart software application that can undertake tasks or do complete jobs on our behalf. And literally, they're just software, mini software programs that can interact with another mini software program, is the way I like to think of it. Now, right now, AI agents aren't that useful because they can't actually do any payments, or most transactions would require some sort of payment. So the answer to that would be to give them that ability, but it is very hard for an AI agent to open up a bank account or to even have a Stripe account. So therefore, the answer is probably to enable digital payments, because it's easy to just spin up a digital wallet and every AI agent can have one.
And you'd sort of touched on there, what I was getting is friction is something that people don't enjoy when they're making digital payments, to the point where we've got companies like Uber, where it's an ambient sort of payment. It happens while you're during the experience. Coming back to digital currencies and adoption in Australia, Andrea, did you have any other sort of hurdles that you've noted that's stopping Australians using crypto as much that Alyse didn't touch on?
It's interesting because as you both mentioned Australia, and Australians are very quick to take up digital products, and we're very open to new technologies, and consequently we have a number of overseas clients that are wanting to enter the Australian market. It's a good test market because of the preparedness of us as consumers to use these new products like digital wallets. The interesting thing is it's very difficult dealing with the Australian regulatory landscape. Now, you'd all be aware of the fact that there's two schools of thought. The first school of thought is that there are no laws attaching to cryptos at the moment in Australia, but there is proposals by government to introduce laws. The second school of thought, which is becoming increasingly very much the view of ASIC, is there is already the existing regulatory regime that captures a lot of these products, which basically is the financial products regime under the Corps Act. And that means that in order to offer these products, you need to have an Australian Financial Services licence, plus there's also various other requirements to comply with under legislation, such as having target market determinations and complying with the disclosure regimes that relate to target market determinations. And this has caused some issues. Recently, there's been 3 cases. ASIC's had the approach now of enforcement. The first case involves Kraken. Kraken had a product that has been determined in the court recently to have breached the Australian design and distribution obligations, which said that the product that Kraken offered was a margin extension product which involved extensions being repaid in either digital assets such as Bitcoin or alternatively in currencies such as dollars or US dollars. And the court held that because of the fact that you could do the extension payments in currency, that meant that it was a credit facility, and that meant that the product was subject to design and distribution obligations. The other component of paying an extension digital asset was not an obligation to repay money, and so that part of the product didn't in fact fall within the definition of credit and therefore within the design and distribution obligations. But obviously the fact that the products run together means that, it's indirectly affected. We also had another couple of cases where the court has basically found that in the case of the Block Earner case, they decided that Block Earner was a unregistered managed investment scheme, so it was in breach of the financial services laws. And then we also had the same thing in relation to another case with ASIC and Coin, and it was held that Coin was actually a non-cash payment facility and therefore in breach of the laws to have a licence for non-cash payments. So basically a lot of these crypto products, they can fall within either being what's called a managed investment scheme, they might fall within being a derivative, they could also be some kind of debenture or bond. And it's very important to look at your product and say, does the current regime apply? Also, what's coming next?
And Oleksii, before we started filming, you and I were talking a little bit, and you've had your own sort of journeys with crypto. Talk me through, what do you see as some barriers for cryptocurrency adoption within Australia specifically?
I think it's regulation, or lack of a proper regulation for that. Andrea mentioned that there is an existing regulation that many of the DeFi activities can fit into. But the thing is that DeFi, decentralized finance, DeFi, which, broadly speaking, cryptocurrency is also part of DeFi. So it appeared as a response to over-regulated bureaucratic regimes, financial systems that exist. And so I'm not very enthusiastic and don't feel that it's heading in the right direction at the moment, especially when I look at their attempts, draft bills, policies and discussions, that it's going to be regulated so to say, in the right way. The problem is that if the old-fashioned way of regulating these things will be applied, there is a chance these new industries, new markets will be stifled. And the problem is that these old-fashioned ways of regulating these things means that the entry barrier into the market will be so high that only large, rich companies will be able, to get this financial license and start their business. But they're not usually those who innovate, they introduce new things. These innovations are born within small creative startups, but the problem is that if you want to launch your product, your services, but you need to spend tons of money on that license, nobody gonna, experiment. Nobody's gonna do this kind of things. So this is a problem, a potential problem. We don't know what's going to be. My thing, I was thinking, what would be the right way to do is that first maybe some kind of regulatory sandbox. Not that sandbox that they launched it. Technically, it failed. The second thing would be, risk-based approach. Like, imagine you launch your product, your business, day one. What risk does your business pose to the market, to the customers? There is no risk, and so it's a good idea to have these tiers. When you grow, your business grows, the risk grows, and so there will be more requirements. But day first, there is no risk to others. You just launch your product. And so the third thing that is used and applied in many countries in different industries is called a declarative principle. When you start your business, you just declare, you disclose basically information about you, but the regulator doesn't check all the information. You just have to be honest. If you're not honest, you lied or you didn't disclose some important information, there will be a responsibility, obviously, but it makes it possible to start your business without spending tons of money on all these regulatory barriers, on red tape. One of the first, by the way, countries in the world, Liechtenstein, was to launch their crypto regulation. In 2018 they adopted, and 19 it started. And so 2 years after, I was speaking with one of the lawyers who helped their clients to get the license in this crypto license. And I noticed that their registry on crypto operators in the market contain like up to 10 operators that got this license. And I said, look, it's been already 2 years and only a handful of crypto operators on the market. And she said, wait for it. It takes several months. It's so expensive for them to get the license. I said, that's my exact point. So it's a new industry, but you applied old-fashioned regulatory regimes, and you basically stifle the industry.
Yeah. I agree with that, and I think it's an incredibly time-consuming process to apply and obtain an Australian financial services licence. And in particular, we've been acting for a number of overseas companies that are trying to come with new types of payment products, digital wallets and so forth. And one of the issues is that ASIC requires you to also brief APRA and talk to APRA about the product. Even though you don't have to get a license from APRA at the moment, there are reforms in the pipeline that next year you may have to have an APRA license. So that potentially means, not an APRA license, but you will be subject to APRA regulation supervision, and you have to have a limited form of banking type payments license. And so that means that for these types of products, and especially when you're talking about fintech startups, innovation, potentially the regulators you have to deal with in Australia is ASIC, APRA, and also AUSTRAC. With the new anti-money laundering reforms, and also the fact that digital currency exchanges have to be regulated with AUSTRAC. So it's very expensive. The other tip I would say to anyone, if you're thinking of entering the Australian market, you need to look at what you're doing elsewhere in the world, because if you've got a problem with any regulator anywhere in the world, ASIC will find out, and that will be a real issue in terms of your licence application. So you need to do a lot of preparation in advance before you even think about applying for the actual licence. There's a lot you can do to try and ease the pain of the licence process.
And then you've got the piece of rolling that out to your mum and pop shops, getting that QR code adoption. So It's interesting.
Building on what Andrea and Oleksii have just said, so crypto or digital currencies are global from the start. However, a lot of startups or newer projects tend to want to register their legal entities in offshore entities or as offshore entities, British Virgin Islands, Cayman Islands, Seychelles. So personally for Transhuman Coin, we've selected the UK. So we are a UK entity. We do have quite a few community members in Australia. However, because of all these additional regulations, as has been set out, this is one of the reasons that we have chosen some other jurisdiction. So for many similar projects, as well as colleagues, friends that have Web3 or digital currencies, we tend to choose other jurisdictions apart from Australia.
Interesting. I want to go a little bit more on the compliance side, and particularly how it's could be set up to enable more adoption of cryptocurrency. I mean, we've had the digital coin CRC be set up. Treasury did a payments update not too long ago. Crypto is not too heavily a focus. What ways do you see regulatory bodies and government and policy enabling a bit more adoption of it? Or do you have other suggestions outside of those bodies which might get Australians to move to crypto? What's going to drive Australians to use cryptocurrencies?
Oh, I'd like to see in the future, I'd like to see a very simplified crypto licensing regime. I think we can forget about the financial products regime. Let's just have, what we term a crypto or digital asset, however we want to define it, and just have a digital asset license, keep it nice and simple. And I certainly would like to just have one, regulator, obviously ASIC, then AUSTRAC, the anti-money laundering aspects, but I don't think APRA needs to get involved.
Mm.
Yeah, it's a good point. To have just one regulator responsible and one license, probably if it's licensing at all. But I would say that if it gets simpler, I would say Australia will attract a lot of startups in this industry. Definitely.
Interesting. I want to move away a little bit from your day-to-day payments, because digital coins can be used for, there's a lot of other use cases. Oleksii, I want to ask you about the concept of title tokens and how this is transforming property registries.
Yeah, it's my PhD was about the idea of a new generation land registry system. So basically, blockchain is a type of database, right? It's just a bit different. Token is a kind of record in this database. And so basically the idea of a title token is that this record will represent the property right. It's just a record, not in the centralized database, but on the blockchain that says that's your property, basically. And so that will require a new land registry, obviously, or at least new technology for the land registry. To understand the advantages of this technology, of this approach, we have to look at the idea of tokenization of real estate, basically, because many people heard about this idea. It's been around like 10 years, and there are a lot of quite successful examples in the world. However, when you look at the larger picture, like, I've heard these enthusiastic ideas about tokenization of real estate, but now when we see the scale of it, it's so small. During these 10 years, nothing really happened dramatic in terms of tokenization. And especially when you look like this CoinMarketCap or STM.com, you'll find the security tokens, and the tokenized real estate is just a small margin of all the tokens. My point is that it's the same pattern that we have in real estate industry at all. So when we look at the real estate and rate the securitized, so to say, real estate, it takes only 1% of the whole market of real estate. it's so small, it's so much marginal. So I don't expect anything to happen within this space of tokenization, so to say. So my idea was that, okay, so the real utility comes when you use this technology to create the registry, so people will be able to manage their property rights, to commit transactions online with their property. Because security token and title tokens is so different. Security token represents some interest in someone's property. It's not your property, so to say. This token doesn't represent the ownership. The idea of title token is that your title, your real estate record of your ownership. And so once these ownership gets digitized, so to say, in the land registry, in this type of land registry, then you can do all these fancy things with smart contracts, with decentralized finance, decentralized autonomous organization, that kind of stuff, fractionalization of ownership, automation of transactions. So the idea is that to make this system more efficient, to get rid of unnecessary bureaucracy, to get rid of maybe lawyers. Sorry, I'm a lawyer myself. But that's the idea of progress, to make the system efficient, to spend less, get more. That's the idea of the technology. So the idea of a title token actually represents this innovation.
Thank you.
It's unfortunate that we have introduced new systems like PEXA. Oh, it's great if you're working in that industry right now. It's streamlined a lot of things, but because things are working well, and because the Land Title Office in New South Wales has been privatised, which could actually be a good thing because they're more open to innovating their systems, but because of what is incumbent right now, it means that there is no incentive to want to introduce any blockchain-based system. And when I was at KPMG, I did actually look into how we could tokenize real estate. Then I realized that the biggest challenge is needing to get the Land Titles Office of each state on board, and they were never willing to give up their monopoly on that, especially New South Wales, because they're privatised at the moment.
I think that's a really important point, that we do suffer from the fact that we've got all these different states and territories. I often get asked the question, can we get electronic signatures by directors, say under a guarantee or under a loan? And the problem is the guarantee is usually a deed, then you've got to look at every single state and territory, you've got to keep up to date with that. It's just a plethora of annoying laws, frankly. It really is an issue, and that is what is stifling innovation.
How do you see regulatory considerations developing to enable fintechs and digital currency? What are some ways that you think it could promote that environment? I mean, you mentioned that there's multiple different laws across different states and territories. What are some other ways that can streamline so that we can promote a healthier sort of fintech environment?
It's really interesting because at the moment we've got the problem that we've got Chapter 7 of the Corps Act, which I keep referring to, which is the regulation of financial products. And for the reasons I mentioned before, it's very easy for some of these digital assets to fall inadvertently within some of the concepts and therefore be subject to Chapter 7, which is, a hideous regime, to put it politely. So I think the first key thing is that to the extent that there is a concern about regulating digital assets, getting on to your point, what is actually the harm? What are they worried about? Are they worried that somebody's going to run off with all the Bitcoin and everybody's going to end up with $0? Like, what is actually the harm? And I think we need to reverse think this process, and rather than say, oh, this is the law, how does it apply? We actually need to think about, getting on to your point, what is the harm? What do we need to worry about? What do we need to protect?
Yeah.
Interesting.
And just have a whole, I think, new approach to what are these digital assets, and a whole new approach to how do we regulate them? Do we need to regulate them? What should we be doing?
Alyse, can you describe how Transhuman Coin uses blockchain technology? We touched on real estate tokenization, but you mentioned earlier it helps people transcend physical limitations. How are you doing that at Transhuman Coin to use blockchain technology for science and enhancing human health?
The current problem right now when we want to fund or support projects or even charities is that we don't actually know where the money is actually going, especially if we're just putting, say, coins into a tin. Is it actually going to the people who need their basic needs met, food, shelter, water, etc.? So blockchain is one of those solutions to solving the provenance and also being able to track and trace where funds are going and potentially how it's spent as well, especially if all the transactions are undertaken on-chain. So for Transhuman Coin, we are, as I mentioned, the official token of the transhuman movement. So what that means is that anyone who believes in using science and tech in overcoming limitations of human biology is very much on board with having your own currency, so that potentially you could even create a transhuman network state. That it's probably another topic for another time. So biology has this book called The Network State. But back on how we actually use that to fund impact projects in science and technology is that, so we have a token that we launched on BNB chain, which is a blockchain network which facilitates really fast transactions and it's really cheap, which is why we originally chose it, because it is a credible competitor to a lot of the payment systems that we use, even credit card payment systems. So however, in our community, we don't really need the fast, the factor of fastness, and cheap is important. However, what it means is that we were able to raise a whole bunch of capital in the process, and that is impact capital. So it's an alternative way of funding impact projects and even research. So a lot of the universities, they have to apply for these grants. This is another alternative to applying for grants through the university or government system. So we have worked with a few universities already globally. So we've worked with Abyei State University to fund longevity research, and their research is published in a peer-reviewed scientific journal. So very credible pieces of research that is recognised by the scientific community. We've also worked with the University of Technology in Sydney on brain-computer interfaces. So I mentioned translating dreams through what we call the dream machine, and we also do drone racing with brain-computer interfaces. So these are all just ways to gather data and understand how humans can interface with BCI or brain-computer interfaces. So how it translates from having a currency that is produced and recorded on a blockchain is so having a token allows everyone who holds that token, who's now part of a transhuman community, to vote on where those funds should go. So, or even any projects or applications that we should build ourselves as a community. So it means that you are part of this community who can choose how you want to, what type of society you want to build, how you want to allocate resources in this mini economy. Every blockchain community economy is a mini economy of its own. And even some of the biggest blockchain networks have the resources to rival small nations. So you're probably looking at some of the blue chips like Ethereum and Bitcoin at the moment, or even Solana these days. So then once we say we have the community can vote on which projects to support or applications to build, then that goes up to our scientific advisory board, who does some due diligence and says, well, this is sound and yes, we should go ahead. And that is how the funds are allocated to different projects or applications. So what blockchain enables is transparency and trust, which is not inherent in a lot of projects or applications that are funded by other organisations.
Yeah, I really like that prescribing value to the digital coin.
Does it provide the priority in getting immortality?
Yes, if that is what the community values and wants to fund, then yes. And I think, it's a bit like it's a democratic process. So currently in Australia, we do get to vote on the party, but we don't actually get to vote on the policies directly. So this is sort of a way in which it enables people to do this, and even decentralized autonomous organizations, they were quite popular about a year or two ago, and it allowed people to vote directly on the policy.
Yeah, it's good brand.
Alexei, in 2021, you presented to the Australian Senate around blockchain legislation. Yeah. Can you talk us a bit through that?
Well, it was a committee led by Senator Andrew Bragg. They were studying things on blockchain and Fintech and RegTech. And so I made this submission on blockchain estate registries. So they invited me to speak at their hearings. And so I presented this idea explaining that one of the advantages of having this system is that it allows to achieve a lot of automation. So we can get rid of up to 90% of bureaucracy around these real estate transactions. And so the conclusions of my research were included in their report, April 2021. And the committee recommended the National Cabinet to run a pilot project with land registry. Unfortunately, since then, nothing really happened, even though we tried. I found some partners and we tried to launch such a pilot study with one of the state registries. But unfortunately, it wasn't successful. So the reality is that state-level governments are not really supportive in terms of introducing this technology. One thing is that, as you mentioned, nowadays it's privatized. Half of that, at least, half of the land registries. So for some reasons, they were not open to innovations. Yeah.
I mean, you touched on this before, Andrea, but there is that element of risk aversion here. What are you seeing in recent policy? You mentioned before that ASIC, AUSTRAC and now APRA are getting on board. What are some other recent developments that you wanted to go over?
I think that the sort of crypto blockchain space is getting a little bit caught up with this need or this regulatory sort of desire to regulate payments full stop in order to have, prudential stability so that we don't end up getting high inflation as we've seen in some other countries. And so it seems to be a bit of a melting pot where there's just a lot of different legal proposals and a lot of talk and debate, but not a lot of action, I think, is one of the issues we're facing now. Do you have a comment on that?
Yeah, I think these ideas started like 2 years ago. Since then, nothing really happened. There were some discussions, discussions, right? So nothing real. But there are two draft bills, right? And they're still expecting to introduce it in 1 or 2 years. It's still quite slow, unfortunately.
Yeah, and I think it's almost it's because it's technology, and not a lot of people understand technology. I think there's a lot of mystique around new technologies, and I think we don't. And you probably, from your experience, say at KPMG, might have done this, but actually look at what are the risks that this product might bring in, because there's no guarantee that there is a risk. There isn't almost an assumption that new technologies will create risks. A classic example is smart contracts. Smart contracts are basically what you would call self-executing contracts. There'll be natural language that will say what the contractual obligation is, and it will say when certain events take place, the contract will automatically complete or self-execute. So it's very popular in the area, or will be very popular in the area of things like trade finance, which are very, issue bills of lading, very paper intensive, or alternatively derivative contracts. They'll be self-executing on certain events happening. And the only challenge with those kind of contracts is that lawyers write the natural language, then coders write the code. Now, is it the case, I think in the future, lawyers are also going to have to be coders, because that's the only way that you can successfully say that the smart contract, natural language and coding matches. And obviously smart contracts can go wrong if there's a technological malfunction. They could go wrong if there's a misunderstanding of what the natural language meant and how it's interpreted into the coding by the coder. But apart from that's just normal contracting anyway. It sounds something very new age and different, but you know, you always have the same issues with the contract. Party A and Party B thinks the contract means something, Party C thinks it means something else. It's the same sort of principles that apply. There's nothing that's magical about it. In terms of the law, it'll be all the usual contractual remedies to solve any of the issues that might happen with the smart contract self-execution.
As we've noted time again, the conversation just stopped, and there's this element of being risk averse. Do you think policymakers are looking to, whether it's the financial services sector, to be the ones to go in and do that first? I know that there's been a lot of movement with stable coins and using that across institutional banking. But then on the other side, we've got, you know, startups and fintechs. Are they looking to these two to go, okay, we're going to take lead from that?
I think it's interesting that there's legislation that's been released in relation to scams, so anti-scams and dividing and apportioning liability for scams. And in the UK, banks are responsible for scams. So if a customer transfers money out to a scammer, then the banks are required to reimburse the customer. Now, there's been a push to have that type of law here, but there's been pushback on that. But interesting now, I've been told anecdotally that now in the UK, the effect of having these anti-scam protection measures is that now customers are scamming the banks. So I'll say, oh, I sent 50,000 to Oleksii, he was a scammer, I want my 50,000 back, but you're my mate and you've got the 50,000, I get another 50,000. So whenever you use legislation to solve one problem, you create another. And that would be from all my sort of years of having to read legislation, I think that we need to reevaluate how we approach legislation. And getting back to Oleksii's point, we need to look at what is the actual risk, what is the harm, what do we need to protect consumers about. Bear in mind that there's no fail-safe way of ensuring zero risk. Like if you want zero risk, then you have zero business or zero consumer activity, whatever you might want to do, or you just stay at home every day and don't go outside your door. But yeah, I think we really need to reevaluate what are we worried about here. And I think there is sort of a spectre of this concept of technology and non-cash payments like crypto that could take government control away from payments.
Apart from the scams, I think there's a parallel economy. So you've got the banks and large institutions, and then you've got the startups. For the banks and large institutions, the value of the transactions is probably a lot higher, but it's a low volume. And then startups is higher volume and smaller transactions. So you can see a lot of activity happening on chain in the consumer and the startup space. So people are paying for items, everyday items, buying things with crypto. It doesn't usually happen with the banks. Yes, 2 of our banks do have stablecoins. I don't know how widely used they are. Last time I talked to some execs there, they were still looking for use cases. A credible use case where there is a slightly higher volume of transactions. If it's just a one-off that happens every once a year, twice a year, then the argument for having a stable coin just isn't there. So I think it is prudent for institutions to have a look at what's happening in this other economy and how is it being used by everyday consumers. Right now it's on the fringes. However, with 1 in 6 or 1 in 3 people holding crypto in Australia, it's bound to spill over into the mainstream very quickly.
And the other interesting commercial or market development we're seeing the rise of the debanked. And it tends to be technology providers, innovative technology providers are facing the risk of being debanked because the banks don't want the potential risk in relation to anti-money laundering, I assume primarily. And that's stifling innovation.
To wrap up, and I'll start with you, Alyse, and you sort of mentioned before that democratised idea of bidding and prescribing value. What kind of personas do you see do you see any trends in some persona groups maybe using digital currencies or crypto more than others? Is there any particular sort of demographic? I know within the gaming space, it's a discussion that's happening there. Do you have any comments on like other trends you've seen on the people who are leading use of crypto?
It depends on the jurisdiction, country, culture. So for
Within
a lot
Australia?
within Australia, I believe it is those who, so it depends on their reason for holding crypto. So is it a store value? So for a lot of people who hold Bitcoin, they will never spend, they never sell, they just buy. So it's a very one-way transaction. Whereas if they're holding, if it's a particular crypto like altcoin, or even Ethereum. So I think, let me highlight three classes that I can identify right now. Bitcoin, store of wealth. You've got Ethereum, which is used for creating decentralized applications. So for a lot of the transactions that you do on a dApp, or if you're building, you need to hold some Ether. So, and a lot of the times you're spending quite a bit because of the fluctuations in price. You may have spent 20 AUD equivalent today, but if you held on to it, it could be worth maybe 2,000. So it's a bit of it's a pain when you think about that. And then you have these altcoins where people are really they're gambling. They're looking for get rich quick schemes. So I think there's these three different personas. There's probably a generation or group of people who are thinking about how they will build wealth and also thinking about what does the future of society and our economy look like. So I think Oleksii has a really good story about storing or using Bitcoin as super. So that's the three types of people that I'm seeing.
Yeah. Do you have any comments on that?
My story.
Yeah, I can share it if you'd like.
So when I arrived in Australia, I started paying this superannuation contribution every month when I got my first job here. So I was 37 and I made these projections in terms of my superannuation investment to the day of my retirement, 67. And so I realized that my investment will be around 65-70%. The amount which is considered the lowest in terms of is it enough for your retirement. And so nowadays it works, if you don't have enough investment to support your retirement, you basically hand over to the government and the government provides you the government pension. And this is how it works. So I realized if I'm not able, I'm behind most of Australians, like 10 years behind in terms of superannuation investment. I decided, okay, what if I create myself SMSF, self-managed superannuation fund, and actually invest my quite modest superannuation contributions in crypto. So I bought Bitcoins. And so very soon, because of the FTX collapse in the US, the Australian exchange, Digital Search, went bankrupt because they hold their funds in that American exchange. And so my savings gone with this bankrupt. But in the result of this bankruptcy process, they retrieved half of the amount and sent back to their clients. And so I got at least half of that. But since then, I made 170% in terms of my superannuation growth. And so basically, it's 170% not from the loss, but from the very beginning. So I actually recovered almost everything and even more. Yeah.
Argument for Bitcoin.
Yes, very much so.
But I learned hard way the rule of crypto: not your key, not your crypto. So basically, it means if you don't hold the private key to your wallet, it means that's not your wallet, it's not your crypto.
Andrea, we are coming to the top of the hour. Is there any other thoughts you wanted to share with the group? Any other areas you wanted to cover?
I think we just touched on something quite interesting, is that some people are acquiring crypto because they want to be able to spend, invest. Other people are acquiring crypto as a long-term investment strategy. So it's and I think that's where the regulation or legislation or the regulators get somewhat confused, because they're quite distinct categories, and it's very difficult to assess risks and develop legislation to cover every type of objective in relation to crypto.
Well, thank you all so much for joining us today. It's been great to have this discussion with you all. Thanks so much.
Thank you, Darren.
Thanks, Darren.
Thanks everyone.